Hey, John, thanks for joining today.
Hey, thanks, Jason. How are you?
I'm great. I'm great. I'm a little confused, though, so that's why I reached out today. We have CMHC just come out with an announcement that they're changing the way people will qualify for mortgages. And it sounded considerable at the time, but I was wondering if you can help me out a little bit on it and explain it.
Sure, yeah, no problem. Thanks for the opportunity. Appreciate it. In a nutshell, what they're doing is they're tightening up the guidelines. So they're also eliminating some of their programs. So they've lowered the debt service ratios to 35-42 hard stop. They've also raised the minimum bar on the credit score. At least one applicant has to have a 680. And they've also eliminated part of the non-traditional down payment, which allowed you to borrow the down payment.
So there's no more borrowed down payment.
Yeah, those are the three major changes. There's a couple other changes on the commercial side. For multi-unit, refinances are restricted to only if you're making repairs or improving the building. And what this effectively does is it knocks about 11% of your purchasing power off. What this effectively does is it knocks about 11% of your purchasing power off. So if you were prior to this able to qualify for a 350 purchase, you're now looking closer to 310. Another way to look at it is everyone knows about the stress test rate, and it's 4.94. This would be equivalent to raising the stress test rate to 6.3%. So it's a very dramatic change at a very questionable time in my mind. I think given all that's going on in the economy and so forth, it almost feels like they're kicking you when you're down.
Yeah, no, I can understand that. And so that became part of the fear. They had the report that came out, whatever it was last week, that suggested that the Alberta economy can see price or average selling price decrease close to 30% in the next 2 years. And it almost feels like with this, they are almost making it happen. It's almost like a self-fulfilling prophecy where they say, okay, we told you it's going to go down to 30% and now we're going to make it happen. And so that's how it feels. It's kind of scary. One of the things that we see in our market is what's really kept us afloat in Alberta is the entry-level market. The people that are new to country maybe, that have been saving their money, they have good steady jobs, but it's taken them a little bit to get their PR cards and qualify and everything. And so they're still able to buy. And then the first-time home buyers coming in, they need a place to live regardless, and they're still employed, so they're buying the homes. And then that sort of has a trickle-up effect where if that first-time home buyer can buy a house, then the person that sold that house then can move to the next level. Well, if they're lumping off some segment of that population, of that first-time home buyer being able to buy, which in my opinion is what's kept our market afloat, then that's really going to have challenges as we go up. The market, I would think 700 plus, might just get hammered.
Yeah, it's quite possible. I mean, the original stress test rules that came in a few years back basically wiped about a third of the home buyers out of the marketplace. And, tightening up the rules on top of that is probably going to make that situation even worse.
And you said the ratio is 35-42. What was it before? And if you can just explain what that was so the buyer out there understands what we're talking about.
Well, they had a couple of categories, and now there are two other insurance companies in Canada, Canada Guarantee and Genworth, and they're different. Okay, so thankfully we've got some choice, and we see that, or we think that CMHC is going to lose about 20% market share because of this, and maybe they're doing that on purpose because they're worried about pending losses in the future. But essentially the way the debt service ratios go, there are two of them. One is called the gross debt service ratio and the other is the total debt service ratio. These are just fancy acronyms for how in the background the insurance company is deciding whether or not they think you can afford a home. And of course, they're trying to protect us from ourselves. So the gross debt service ratio is really what percentage of my gross income would be going towards this new home that I'm buying. And the total debt service ratio is what happens when I add in all my other debts. And so before, they allowed you to go up to 44% of your gross income to cover everything. So the new home plus all your existing debts. So that's now been lopped down to 42. And it, like I said, it can knock about 11% of your purchasing power off.
Okay, perfect. Now you did mention the two other insurers, Genworth and Canadian Guarantee or Canada Guarantee. So they haven't necessarily bought into CMHC's strategy here at the moment. Is that correct?
Right. So this is a CMHC. It's not being mandated by the government. It's just their own decision. And at this point in time, we've heard nothing from Canada Guarantee or Genworth. So, for example, Genworth has a minimum recommended beacon score of 600 versus the new 680 with CMHC, and they allow 39 GDS, 44 TDS. So that's a huge difference. So we'll see a flood of business going over their way as starting July 1st would be our prediction.
And this probably makes sense then why somebody would want to come to a mortgage broker like yourself versus a big bank, is because you're really understanding the intricacies between what's out there, where somebody who works in a bank maybe is just being informed with whatever their management is telling them versus what the options are out there in the world. Because I'm sure different lenders are wanting to deal with different insurers as well.
Absolutely. When I was at CIBC, there was a period of time where we would only deal with CMHC, and that's because kind of little known bits of information here, but Genworth and Canada Guarantee, being private corporations, there's some mechanics in the background where they didn't quite cover the full loss. So a bank would maybe avoid them or that extra paperwork of getting the extra money when there was a loss. Canada Guarantee and Genworth are actually backed up by CMHC, which is interesting in and of itself. But yeah, you're absolutely right. Individual banks and individual lenders make their own guidelines and their own rules, and they're oftentimes very, very different. And so it's definitely a good idea, even just for a second opinion, you know, to get us as a sounding board to see what your bank is telling you or what your current lender is telling you. You know, does it really make sense, or is it really in their best interest as opposed to in your best interest?
No, that makes sense. Perfect. Well, thank you for that. Is there anything else that you want to add that you think the public should know about this?
Well, not at the moment. I mean, stay tuned to see what happens with the other two insurance companies. There actually was talk at some point of CMHC going to 10% down.
Wow.
Now that's going to really wipe out a lot of buyers. So hopefully it doesn't come to that. You know, we still believe that 5% down is in a lot of cases hard enough to come up with it in the first place. And if you really do want to help homeowners and Canadians in their quest for home ownership, I think, you know, you really need to be flexible in your product offerings, especially given the COVID pandemic and the financial troubles that people are in. In my personal view, I don't think this is the right time to squeeze even harder.
Yeah, no, I agree. And I hope that they're not making a self-fulfilling prophecy or creating a self-fulfilling prophecy here and doing this. So 2 years down the road, they can say, oh, I told you so, you know, that would be an unfortunate event. And so, John, is it all right if people had questions about this to reach out to you?
Absolutely. We're always here. Brad and I, our approach is to educate people first and foremost, so you can understand more about how mortgages work. And that will help you, in our view, make more informed decisions and, achieve your financial freedom sooner. So we're very, very happy to help people and educate them and teach them about even their existing mortgage or a new mortgage, how the whole process works, and really help guide them to make those informed decisions.
Yeah, it's perfect. Thanks, John. And so we'll put John's information in the comments below. You'll be able to reach out to him anytime you wish. And if you'd like to have a chat with me, you can visit 15minuteswithjason.com. It's going to give you a calendar where you're able to book a quick 15-minute video conversation like this, so we can go over a lot of your questions. We can talk about what's happening on the market if you want to see what's happening in your neighborhood, or just discuss this new CMHC program. 15minuteswithjason.com. Anyway, thanks, John. Have a great week, and we'll talk to you soon.
Yeah, thanks, Jason. Take care.